one more company that has reported their numbers. Mindspace Business Park REIT reported a good set of numbers in Q2 FY26. Revenues, that saw a jump of 25%. Net operating income saw a jump of 26% as well. Now we're joined by Ramesh Nair, MD and CEO at the company, to talk to us about the outlook going forward. Mr. Nair, thank you so much for joining us on the show and a very good afternoon. I want to start by talking about your gross leasing, right? That's around 2.6 million square feet, and this is in the first half of FY26. For the rest of the year, what is the outlook there? What is the growth there that we're seeing?
Thanks, Vinny. It's great to be on your show. We've had a very good first 6 months, especially a very good second quarter, where we did leasing of 800,000 square feet. If you look at our parks today, in a park like Hyderabad, where we have 10 million square feet, we only have 200,000 square feet vacant. In our entire Pune portfolio, which has 3 parks, we have only 100,000 square feet in our portfolio, which is vacant. So gross leasing shouldn't be the right number to look at when you're looking at numbers where you look at our occupancy today, it's gone up to 94.6%. So the space which we have vacant predominantly is in our Airoli East and Airoli West campuses. And that's where we're going to be doing a lot of leasing over the next few months.
Okay, that's where a lot of leasing will come in over the next few months. So occupancy, right, you mentioned that it's, at around 94.6%, while including new acquisitions, it's at around 93.8%. So what is it for the newer acquisitions right now, the occupancy, and when will it come back to the normal levels of occupancy that you usually see in business?
So a few months back, we picked up a 800,000 square feet asset in Hyderabad. There is 250,000 square feet vacant there, which we hope to fill in the next quarter or so.
Okay, so that will be filled in the next quarter or so. So, okay, the numbers over there would also go up. In one of your micro markets, there has been, we've seen that the rentals over there are rupees 100 per square feet. Average portfolio rentals are rupees 74. Are you seeing higher rentals in any specific geographies, or this was one-off case? And will you be able to see higher portfolio rentals in FY26 overall for the whole year as well?
Definitely, Vinny. So I think the market which has seen the maximum growth in rentals in the country is Hyderabad. 1.5 years back, rentals in Hyderabad was around 75, 76. The same micro market today, the Madhapur high-tech city market, today has gone up to around 95 to 100. And we've been big beneficiaries there. We have 2 large parks there. We have close to 12 million square feet. Plus, we have another 3 million square feet, which is under construction. So that's the market we have bet on big, and that's kind of paid off also.
Right. Last quarter you had indicated that about 2.2 million square feet has been demarcated to date, and 69% of this has already been leased. If you could give us an updated number on that one, and also, the target for FY26 when it comes to DPU, which is 14% growth is what we saw in the first half.
So I'll touch the DPU growth. This used to be a concern a couple of years back, where people used to ask us, why aren't the distributions kind of going up? Look at this quarter where distributions have gone up 16%. And the 3 previous quarters, our distributions have gone up 18%, 38%, and 11%. So distribution is clearly going up. In terms of overall vacancies, again, look at a market like Airoli Gigaplex, where our occupancy used to be 72%. Today, the same park, since the SEZ demarcation, that 72% has become 94% in terms of occupancy. So different markets all doing well across the country.
And what about the demarcation?
Demarcation, 2.6 million square feet has been demarcated, of which we have leased 2 million out of this 2.6 million square feet.
Also, just the last word from me in terms of overall the IT side of the business, is there any lag over there or some muted rentals coming in from the IT sector?
We haven't started seeing any of those AI effects or Trump tariff effects. We haven't actually seen it. I was just looking at the numbers for the first 9 months. We're talking 40 million square feet. The market has actually gone up 29% in the first 9 months compared to the first 9 months of last year. Our portfolio today, 54% of our portfolio is GCCs. All of them continue to do well. And 8 out of our 10 top tenants have just taken space with us again in the last 6 months. So the market is doing well. Demand is an all-time high. Numbers are phenomenal. Every quarter, I see a new record being broken in terms of net office space absorption, despite all the global uncertainties.
All right, we take that point. Thanks a lot for joining in and giving us your views on this space. Wish you good luck, and I'm sure a lot of your REIT holders would want better, distributions that would come by from you, and also increased leasing for you as well. Take that break, come back. On the other side, we focus on the markets and a lot of stock-specific action. Stay with us.